Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Monday, August 11th, 2025. So, Mr. Market, it made it look like he read my the morning notes and played almost exactly to what I wrote out here. So, I said my trading plan was to sell some call premium early, then look for a straddle trade on the downside with the downside bias. So, if the S&P, I'm going to go from here. I anticipate sellers to be stepping in near the 6304, 6403, 6420 zone. And that is pretty much when I wrote the call premiums on the S&P, went really easy with it. We had a pretty good day today. But what I put was on the downside, if the bears can get below the 63.78, it's going to come down to the 63.66, and I'm expecting the gap at the 63.41 to get filled. It's probably could go. It'd be tomorrow. It'd happen. We have the CPI numbers, so that could be some kind of trigger. But let's take a look. So we made it up to 64.08. I sold the 64.10s and bought the 64.20s, so it ended up working out really well with that. And then once we took out the 63.78, 79 line, let me put that right here. Right this. So I said that I was anticipating that we would get some selling down to this pivot to 63.66, pretty much where it came down to, and then we bounced up. So it worked out pretty much exactly as anticipated. We made 1,500 on it. It could have been a lot more. People in the room, hopefully they didn't listen to me when I said I was taking, because what we did is I took I went long the spider. I'm sorry. I bought spider puts at the 637 line, and then bought IWM calls at the 221. And when the indexes, when the S&P started running up, what I did was I left it. That's when I sold the call the call spread on the S&P, and then I ended up taking another trade, and I took the 638 puts on the S&P. So those, at 638, the spiders ended up going all the way down to 634.80. So when I got out of the 638s, I made a decent profit on that. And then when we were here, I took the 637s off. That was like about even, because they did go up before when we got into those. But in any case, if we would have held them all, we would have actually could have made really, really nice profits today. But I'm like everyone knows, I'm pretty conservative with it. And when I see it, a decent profit, instead of putting a stop, because the market's been so volatile with these up and down moves, I just really lock in the profits, and that's it. So let's get back to the S&P. We have CPI numbers tomorrow. If the bears can, let's say they come in, higher than expected, then I'm anticipating that we're going to see the 63.40 gap filled and possibly even come down to the 63.12. So that would be a decent sized drop if it happened. I think it, depending on if it comes out lower than expected and they think that the Fed's going to cut rates, then I'm anticipating we'll go up to the 64, today's high, and then possibly test the 64.28. But I'm still leaning down on the downside for tomorrow. I just, like I said, we have not had any kind of decent little correction. I think that whatever low we make tomorrow, if it does open up down, you want to probably cover shorts, because they usually, typically, if we get a big down day, then they come back with a big up day. So right now, if it opens down, I'll probably be looking for a place to buy. But I want to, like I said, we could see us trading all the way down at these levels if things come in bad, and if they come in good. I mean, the thing is that these the rate cuts that the street is anticipating is baked in probably 20 20 times already. So, I don't know why that would be, why people are making such a big fuss over, is the Fed raising rates or cutting rates and moving the markets 100 points at a time. But in any case, we are due for a proper pullback. And like I said, I'm anticipating that we're, within the next, say, 2 weeks, that we really could be trading somewhere down into these levels here just to fill some of these gaps and that. And if it gets, to where we're getting a decent correction, then I could see us coming down to these levels. But right now, they haven't got it below the 50-day moving average, 63.52. So if they get below that, then we're going to anticipate coming into this zone here, which is 62.97, and then down to the 62.81, and then possibly just closing this gap as well here at the 62.55. So a lot of it's going to depend on what happens with CPI numbers tomorrow. So no sense really going in what I think is going to happen, because once that's released, we'll have a pretty good idea as far as which way the market's going to be going. So let's see what plays out tomorrow. Have a fantastic night, and I'll talk to you guys in the morning.